from the heart of Dubai, where tomorrow is being built today, to the world. Welcome to the CTO Show with Mehmet. Here, we redefine technology and reimagine possibilities. With Mehmet, delve into the riveting realms of AI, cybersecurity, and digital technology. Experience the thrilling highs and lows of startups. Immerse yourself in the spirit of entrepreneurship and witness the future of business innovation being written in real time. Now, without further ado, let's tune in and explore the future.
Hello and welcome back to a new episode of the CTO Show with Mehmet. Today I'm very pleased joining me from the Bay Area in San Francisco, Karthik Suresh. Karthik, thank you very much for being with me here today on the show. The way I love to do it is I keep it to my guests to introduce themselves. Tell us a bit more about you, what you are currently up to. The floor is yours, Karthik.
Yeah, thanks a lot for having me on the show. So I'm pretty excited to be here. My background, so I currently am the co-founder of Ignition. So Ignition is it's a AI product success platform which helps users through the entire product development lifecycle from research to building your product all the way to go to market and launch plan. And before Ignition, I was at Facebook. I was a product manager there at Facebook Search and then Facebook Reality Labs. And then before that, I was a very early employee at a company called Craft. And now it's a Series B company. So I was there for 4 years, basically saw how to take a company all the way from 0 to 1. And then before that, I was in a completely different field. I was in Wall Street. I was in like high frequency and algorithmic trading. So seen a few different fields and excited to chat with you today.
Great. Thank you very much again, Karthik, for your time. And I know how busy it can be, especially when with busy schedule for someone like yourself. You mentioned about a little bit about your career. So, and I like to know the stories behind, jumping from one area to another. So what led you to be in the product strategy at big company, at the tech companies, and then, being a member of the founding team? So there must be kind of a pivotal moment, I would say, that, you said, okay, you know what, I have to be doing this. So if you can share that with us.
I think like there's this very big difference between like working for large companies and working for startups. And I think I just want to first compare and contrast the two roles, right? So in a startup, you kind of own everything. You don't have a ton of resources, the success depends on how well you're willing to like hustle and roll up your sleeves and do what is required. Like, but in a large company, you have a dedicated like not just a design team, but also like data analytics team, and then a user research team, and then a product marketing team. Basically, like to help with the whole launch process, and then the whole development process. But in a in a large company like in a startup, you basically have to do all of it yourself. Like I even remember like if I want to look up some data on how users are using the app, you would write your own SQL query to a database and pull it. And of course today now you have ChatGPT, which is your friend. But in a large company, it's less about that. It's more about like it's also about like stakeholder management, aligning with other teams, unblocking with your engineering teams, being able to present the same concept at different layers, so people at exec level can also understand, and people on your peers on the other side can understand, and then you can get buy-in and execute. So it's a lot of the people skills are very important there. So I would say it's a mix. Um, for me, I felt like uh, startups are always the place to be because again, there's no right or wrong answer. It depends on your own comfort zone. For me, it's always believe like it's less about being a cog in the wheel, but about driving the entire product forward. in a Facebook, it's around almost 50,000 people. There's a small part which I own, but as in startups, you basically pretty much get to dictate the destiny of the company. And also more than that, if you're very passionate about a certain idea and you want to exist in the world, this is an amazing opportunity for you to like work on it. And I feel like it makes my job more meaningful. It brings me more purpose. And at the same time, I have less of the politics and other things which I have to worry about in a big company. So that's kind of what uh, excites me to work on a startup.
Absolutely, and for me, like I've been always, kind of by luck and of course later on by choice, working with startups for the same reasons. And while some people they see it like a little bit challenging, wearing multiple hats. Of course, like I'm not on the founder side necessarily, but when you start something new in a new region, for example, for a startup company in a new area, so you have to be the sales guy, the marketing guy. You have to be the even the admin assistant that takes care of the office manager. Some people they don't like it, but for me also like, and I can 100% understand that, Karthik. Now, every time I have someone who's a co-founder, I ask maybe the same question, but this is kind of first curiosity for me, and second because I believe this is very important. So when we talk about Ignition, like where you are a co-founder today, Karthik. So sorry, what gap did you identify in the market that you said, what, we need to start this? So Ignition must
Yes.
have came up from a need in the market. So tell me a little bit about the story behind Ignition.
Oh, sure. Yeah. So for me personally, it was, for example, I was launching one of the features for the Facebook Reality Labs. I forgot it was like a feature for Oculus or Portal. And the launch plan, the go-to-market plan to launch that feature was a spreadsheet with 100 tabs. It's literally 100 tabs, and each tab, and then there's a tab to keep track of each tab, and nobody knew where to find the latest, the messaging about the product, the positioning, all the campaigns, all the checklist. Uh, and the way they used to solve it is, a bunch of people get in a war room. We have a few program managers there, and then trying to call people's names out and then solving it. So I felt like there had to be a better way to do it. And at the same time, I met my co-founder, Derek, who was an early employee at Rippling, the HR tech company. And he was the head of product marketing there. And he felt a similar pain where he felt like there is not a lot of tools or software to help people with the launch process. So we felt like, hey, there's so many SaaS tools on the engineering and product side. And obviously, the marketing tech and the sales tech is extremely crowded. But there's this whole GTM gap, the go to market gap between product and marketing and product and sales. Product things, they are done as soon as a product ships to production. And then the sales and marketing redo a lot of the thing. They have to figure out, they still have to talk to users, understand how they have to like message the product, position the product. And there's no clear bridge between those teams. And that's kind of where we decided to, invest in Ignition.
That's great to hear, actually, Karthik, because I know like majority of the startup they face the same thing. Now, being yourself coming from a product management background, like how this help you? And by the way, just people by now I think they know how much I'm biased a little bit to product managers usually, because when I was working as a sales engineer and later even as a sales rep, so they were my favorite people to talk to in the organization because they were the bridge. So tell me how this also helped in shaping how Ignition is today.
Yeah. So I think wearing a product hat, so there's a few things about a product manager, right? The first thing is about, making sure you talk to the user and you understand the user needs. And it's not just about, I think there's a big difference though. It's like, it's not just about understanding the customer needs, but it's also understanding is it a must have? Is it a nice to have? Is it a painkiller? Is it a vitamin? Will they put their credit card down to actually pay for this feature? People obviously have a lot of things which they want to improve, and they like to complain, they like to talk about all their problems. But when you actually like, if you treat everything at the same level and end up building a bunch of features, they may not actually pay for it. So you got to be really careful in kind of assessing what's like some must-have feature which they'll pay for, and then not it's just a nice-to-have feature. Then the second is like more about like when a lot of the people when you talk to your friends and family and people which you start off with when you want to build a new product, they want to be nice to you, and they always want to say yes to you. Oh yeah, that's a great idea. Oh yeah, you should go build it. And you should be very careful. And there's a whole book called Mom's Test addressing this issue. So you need to be very careful that you just don't basically start building on whatever they say. And then I think as a product manager, you have a lot of experience um, trying to separate out the things which people say as like what they is a real problem and what's something which they would actually like to use and pay for, versus like just like a problem which this is a problem, but it's not the end of the world. They can deal with it with a spreadsheet, for example, or some other tool. So I think having a product hat really like helps you think through those different requests as to like which one is a must have or which is not. That's one. The second thing is a product sense, right? When you're actually building the product. So speaking to customers, speaking to potential customers is before building the product. And while building the product is about product sense. And a lot of the times, let's say you do hit on a right problem, and the problem has a big market and people are willing to pay for it. Then when you're building the product, you really need to think about how they're going to use the product. And it's almost like a art as much as science. And that comes with experience. That comes with like you seeing a lot of the users use various different products, and where they succeed, where they fail. And it's all about looking to the entire funnel of like, okay, how do I onboard the user? What's the first time user experience? How do I activate the user? How do I get the user to come back the next day and the next week and the next month and keep giving them value every time they come in? And like, how do they use it? Like, and in the perspective, and that's product sense. And that's very important. And as a PM, you have that. Uh, and then finally, the how you convey the value prop, right? And that's where even Ignition really helps you. Is like when you talk about your product, how do you think about messaging it so that your end target audience or persona actually gets it? They understand your value prop. They understand how you're differentiated from your competitor and why they should try out your product. The time is very limited. You're just another startup and thousands of startups. Like why they should spend their time trying to use your product. So capturing that is very important. So I think being a PM, it's kind of like you're kind of trained to think through all of these different processes. So I feel like it makes it much easier to like build a startup.
Absolutely, like very insightful, I would say. And here I want to ask you also, Karthik, like, for you, you have like deep roots in both, the consumer and enterprise products. So, and combining these two, how do you think, there's the best way to balance a user-centric design? Because you just mentioned you need to think about how they're going to use the product, right? With the business objectives in your product strategy. And you can like feel free to give example even from Ignition also as well.
So basically the question is how do you like think about like building products at a B2B company versus a B2C company?
Yes.
Yeah. So B2B and B2C are very, very different. I would say our markets are very, very different beasts. I think, and also like there's also like it's a pretty loaded question. So I'm just trying to think how I can frame it.
Sure.
And there is so many ways. They are different, but it's also very different as a startup versus an established company. And if you're a B2B company, you're selling to enterprise. As a startup, you just need like 5 to 10 people to use your product and validate it, right? You just want to make sure that, hey, you build a product, you have like your design partners, your early set of customers who are willing to use your product, and you want to test your product with them. And you just need about 5 to 10 people to test it and iterate and use it, and then finally say, okay, now I'm actually getting value, and you can see them coming back to your product again and again, and see if you have product market fit. And then when you want to scale, it's like, okay, how do I find 100 of these users, 1,000 of these users? Where do I find them? Where do they live? That's a big part of the go-to-market process. Like, if they live in Reddit, or if they live in somewhere else, and then, but it's more um, and also like the pricing model is very important. And also like, you also need to think about, if I sell to that one person, how do I expand to multiple people in that company? Sometimes the buyer might be different from the user. So the user might be like a PM, but the buyer might be a chief product officer, or a user might be an engineer, the buyer might be the CTO. So how do you then position the product such that it adds value to both and it makes it easy for the engineer to get the budget from the CTO? So there's so many other factors which goes in building a product. For a B2C product, the B2C product is only successful if you can scale it, if you can have like hundreds of thousands of users. Of course, there's like, there's a D2C model where it's a subscription based as well, but I'm just talking about like purely B2C where it's user driven. And there, the main metrics are like your DAU, your daily active users, your weekly active users, your monthly active users, how you're growing them, and how much time are they spending on your apps, the session time. So you kind of optimize these metrics, and then you're not thinking about revenue at an early stage. You're thinking about growth. So I feel like there, it's not just about if fighting users like your product. If you have 100 users, if you have 1,000 users, you're not going to go anywhere. You need a lot more, and you need to have a strategy to scale, and you really think about virality in that case. So are people not just using your product? Are they referring your product? And then are they thinking about like, you're thinking about network effects, like how are the network effects playing here? How do I build for the network effects? So it's a very different mindset. And that's why typically you don't see a lot of people crossover from B2C or B2B. You see that people spend their entire career in a B2C or entire career in a B2B. But yeah.
That very insightful, and thank you for I know it was a little bit loaded question, but thank you for explaining that in details, Karthik, because this is something also I discussed on the podcast and outside, because people comes and say, hey, like like what would be the different strategies and the metrics, and you just explained that like very very in a very clear and straightforward way. Now I know like this is something also you like to talk about it, and it's a very famous term in Silicon Valley mainly, and which is building a 0 to 1 company, right? So how we can go from 0 to 1. Now, I know like I don't want to make it a loaded question. Let me break it down a little bit. So, do you still think, Karthik, that there's room to really build today a 0 to 1 company?
Yeah, 100%. I think like if you see the history of Silicon Valley, if you see what happens, like I know it might seem very crowded today. I know it seemed like, oh, every possible idea you can think of, there's a startup who's building on it. But if you look back into the history, there have been pivotal moments when there's a new technology which comes in and that changes everything. The last time it happened was iPhone, the mobile, right? Everything was a desktop app, and then iPhone came across, and then and then you could probably question, oh, every possible desktop app was already built, and then iPhone came across, then you got like Uber and Airbnb and DoorDash and like hundreds of thousands of apps, and each one is like a very successful business. And then same thing is happening right now. Um, what's happening is there is this revolutionary technology about large language models, which is basically a next word predictor, and the whole it started with OpenAI releasing the GPT models, and now Google, Anthropic, there is Meta. Everybody is have their own models, and I can see that's drastically changing how you think about software development, how you think about product development, and the new use cases. It's less about project management. It's less about workflows. It's more about automation. It's more about how can I not just help you do the job, or how can I help you organize the job, or how can I help you organize your data, which is what a last set of um, tools did. Now it's like, how can I be an AI assistant helping you do your job, like help you automate a significant portion of your job so you can focus on what's most important. You can focus on more of the creative aspect of your job. So I think that opens up this whole space again. And there are so many zero to one products being created. There's like an AI agent in healthcare, AI customer agent bot to automate customer success, AI finance bot to like negotiate, any kind of a financial deal. There's like AI in every industry for every use case. There are new automation and agents which is coming across, and that's going to blow up. And I think for me, that's where the next set of like not just like one or two zero to one, but like hundreds and hundreds of zero to one startups are going to be born, and in the next few years are going to be very exciting.
Actually, you answered my second question already. Like, will AI like accelerate this? And you just mentioned yes. Um, but what's the key to because if anyone have read actually the book by Peter Thiel, like he talks about creating kind of a monopoly, or let's say what
Yeah.
some people they call it the first mover advantage, right? Now,
Yeah.
if we think about, and I'm not asking this question, Karthik, for challenging. I want to also take your opinion actually on this, because one might think this way. Okay, if everyone is gonna use the LLM models and embedded, how we can do the really differentiation? Like, okay, when we applied for one specific domain, let's say healthcare, as you mentioned, yeah, definitely. I go and apply it in education, absolutely. But how really we can differentiate? Because actually, what I believe AI have done, it democratized actually the access to technology more than any time before. So what are your thoughts about this?
Yeah, that I think that's where there's two ways to differentiate, right? One is like you pick a niche, like you just mentioned, like healthcare, manufacturing, entertainment, finance, education, and you build there, and you become the largest vendor or software guru tool, in that space or for that use case. But most of these use cases are using like a GPT API as a wrapper, right? You're just using a GPT and then adding your own context about your own industry or the niche you picked, and you're working. The other way is to like more contextualize this and build your own custom LLMs, which is trained on your own customer data. And a lot of these are like, for example, copy generation, and then there's enterprise search. There's a lot of these are using custom LLMs, which are using taking an open source LLM and then with training those LLMs with your customer data and also all the other contextual data you have, and then making it the best for a specific use case. That's kind of how you differentiate. But I agree. I think you have a very important point there in this whole journey of the explosion of AI startups. There's going to be a lot of copycats who are doing the same thing or very similar things. At the end of the day, there's no moat. And moat is something very important to think about. And that's how you eventually end up in a monopoly. First, you start with a moat, and then you expand the moat, and then you become like the software. But you're right. I see a lot of the companies that's like, hey, like for example, copy generation. I see like there's some 100+ copy generation companies out there, and everyone is using a GPT with maybe a different UI, with a different UX. But at the end of the day, it's all the same. So only a couple of them are going to survive. So yeah.
Absolutely, yeah. Like, and again, as I said, like I wanted to hear your opinion on this, and I agree with you on that, because the ones who copy just for the sake of copy, they would not survive. I believe they would reach a phase where okay, like, because the others who started before, they have like better UI, better UX, and we're gonna see this how it will be shaping in the future. Now I know, like, also Karthik, you have insights on like some other emerging technologies like crypto, NFTs, and many other technologies. So how are you seeing the impact of these emerging technologies, let's say, on the traditional business models in the future?
So there's other technologies. Crypto is a good one. Blockchain. I know there's like, unfortunately, there's like the blockchain technology and also the crypto, the currencies itself, and sometimes people mix both. And crypto as a currencies, there's a lot of speculation there, and there's so many coins which people use to trade and speculate. But then there's also the blockchain, which is the technology underlying all the cryptocurrencies, which is fascinating. And I think that's creating a decentralized ledger is one of the most important use cases, because it's very hard to trust people, and that's why you have a centralized authority. Like even simple, like when when you want to settle shares, you have a centralized ledger, like all of your driving license data, all of their whatever very important data you want to store is centralized with an authority today. And in the future, I can clearly see like a blockchain replacing that, a centralized authority, and then making it into a decentralized, trustless ledgers where you don't have to worry about the data breaches and compromise and security issues or bad insiders or the government's acting not in the right intent. Blockchain is a very good, interesting technology. I am, I'm paying a lot of attention to, and the most exciting part is the intersection of AI and blockchain. Basically, decentralizing ton and ton of data using blockchains, and then using AI to help with querying and just pure useful generation. And that's going to be an exciting use case.
Yeah, exciting time ahead, I would say. I agree with you because, the combination of both. And I remember last year when I was still doing, kind of solo episodes when I was still new on the show. And people were saying you're crazy, like how this will get in. But I'm happy, like more and more by the time people are seeing this, let's say, merge or marriage, if the term is correct, between these two technologies. And I'm sure like it will be very, having a lot of useful use cases also as well. Now, I want to ask you something like a little bit more depending on, growing a venture and, their own company. And you've been part of, startups right from its early days, and you also founded your own venture. What do you think is the most common misconceptions about startup growth and, venture funding?
Misconceptions about startup growth and venture funding. I think since it's talk about startup growth, I think the biggest misconception out there about startups is like it's glamorous to be a founder and everyone wants to start companies. It's not. It's very, very hard. 9 out of 10 startups fail, and at a very early stage, and it's a seed, 7 out of 10 fail, and at Series A, still 50% is a failure rate. So, um, trying to step up an idea is very, very hard. But I think from outside, it looks very glamorous, and it just looks like something everyone should do. But in my opinion, you should only be working on it if you're very passionate about seeing an idea exist in the world. If you're just doing it for money, or if you're just doing it because you will it's basically a glamorous way to put yourself out there, you're going to fail. So it's very, very hard, and that doesn't come across very easily because right now society glamorizes founders and even more glamorizes the VCs. On the venture funding, it's like there's two sides of the coin. Anytime you can bootstrap your own business, you should do it. We should take only venture funding only when you know that you're going to grow at a very large scale, because the VC funding or the VC fund, what the VC fund is trying to do is like, let's say they raise 100 million, they are trying to return 3 to 5x. So they are trying to return like a 300 million to their LPs. So in order to do that, again, with this 70 to 80% failure rate, they need to invest in a lot of startups, and they need 1 or 2 startups to really hit it big, to make it like a billion plus. So it will return the entire fund and also hopefully return like thrice or 4 times the fund. They are looking for billion, like they won't even invest unless they think that you're going to be like a $1 billion company one day. At least you have the potential. And then they have 10 of them, and even if 8 fail, 2 of them hit like billion plus, then that's good. They have returned their a multiple of their fund and they're happy. So it's a very different kind of I would say, attitude about when you should take venture funding. And then the second is like you lose control as especially as you raise more and more money. There's a lot of there could be a lot of misaligned incentives as the company grows, because maybe as a founder you wanna maybe some C companies where as a founder people wanna exit at Series C and make some make good life changing money and move on, but as an investor you wanna keep running it and take it to IPO, because that's when you meet your objectives. So there's a lot of there could be a lot of misaligned incentives as the company grows. So these are all the things to watch out for. And then finally, I would say like a lot of the times there's a misconception about even on the VC funds, like especially if you come from a background, banking or consulting or different background or private equity background, that you can get good at picking the right startups. It's actually more. I see like the more and more VCs who are successful have some kind of an operating background, because they're the ones who can empathize and feel the pain as a founder, what it really takes to check up a business. And those are some of the best partners I've worked with. So yeah, there's like so many things here, and I could go deep and even share some stories, but yeah, there's I think the fundamental misconception is like how glamorous it is, and the reality is it's exactly the opposite.
Yeah, absolutely. And I've heard like every kind of story, especially in the past year and this year, about how sometimes founders think it's easy also as well to get funding, and of course the misconception not from founders, I mean, but people who look at the startup ecosystem. Oh, like there's a lot of money over there, right? So this founder, he gonna like now get his I don't know, $10 million check, and then they're gonna be rich next day. And of course, we know like it's not the case. But when it comes to, you mentioned something very, very true, and every single guest I asked them this question, they mentioned this. So they said, as long as you are fine with the way you're growing your business and you don't need to grow fast, so you can keep bootstrapping and actually, reinvest from whatever the company is doing. Now, but sometimes, Karthik, and I'm not sure if you've experienced it yourself, but I'm sure you have the experience. Some founders that they believe that, look, like my only way to go out to the market is to get the funding, because without the funding, I will not be able, for example, to build, let's say, not the product, they have the product, but maybe some additional features to the product, or maybe you will not be able to build the support organization, or maybe we need like to invest in the sales organization. So in these situations, what do you think, the founders they should do when they go and start to talk to investors outside? And, they should go for VCs or they should go to angels? Like, what do you think from your experience the best approach to handle this?
So can you repeat the first part of the question again? Just to
So
make sure that
yeah. So I was saying like sometimes, founders, they would say, yeah, we get the bootstrapping and we know like we need to bootstrap, but actually, we need to, be a little bit kind of perfectionist, let's say. So I want to have the best support organization. I need, to make sure that all the features are up there. And this, I don't have the money now, but I know that there's a need, right? So from your experience, like, is it best for them to go and, seek for angel
Got it.
investments? They go to the VCs. What do you say about that?
Yeah, I mean, I think even if you are a VC back, even if you want to be a VC back company, the first thing, of course, is like, you know, you gotta like build like an MVP, like a most viable, a minimum viable product, for your own product, and then go test it with a few users, right? So you eventually, like, almost always everyone ends up bootstrapping for the first few months. Like, finding the team, like, if you do you want to do it solo or do you want to do it with a co-founder? And if you want to do it with a co-founder, great. And you want to build it yourself, or maybe get a help in a development agency, or to actually build an MVP. And then you got to talk to like, so at least 50 to 100 users, to figure out if this is valuable. So that process is still bootstrapped. The point at which you raise money is like you already have some kind of a MVP, even if it's a Figma design or some basic design, or a working prototype, and you have talked to the users, and users have said, yes, this is something I'll absolutely buy if you build it. In fact, users can't wait for you to ship it, and you have a lot of conviction in this idea. And that's when you probably even go looking for money. And then at that point of time, you want to actually decide, okay, do you want this to be a venture-backed business or not? What that means is like, how much do you think this product is worth? How much will it grow? Will it grow like 3 times year over year? And then, will it be worth $1 billion, or will you be making 100 million in revenue in 5 years? Does it have the potential, or do you want to make it more of a lifestyle business where you're generating a few million a year, but you're very happy with because you can lead a pretty good lifestyle and take a pretty good salary at that point. And what direction you want to grow. So that's when you decide, okay, whether I want to make it a venture backed or more like a bootstrap. Even in a bootstrap business, you could still go to angels and take money at a very low valuation, and that's still fine. And everyone does that. It's a friend. You typically do a friends and family round where you raise like a 200K to half a million with all your friends and family, and depending on your network, and that's still fine. If you still want to have a lifestyle business, you could pay them out as dividends or the other ways to pay back these people. But the real decision comes when after this round, what you want to do. Do you want to take venture money, or do you want to bootstrap it and then run this based off of the revenue you're generating? So the other reason why you have to go take venture money is the product development itself is going to cost you a lot. This is especially true if you're building a deep tech product. If you're building a hardware product, then there's no way you can bootstrap it unless you have saved a significant amount of money yourself. So that's when you got to approach, figure out how can you get financing. But my advice is postpone raising money as much as possible and get to a state where you have a lot of conviction on your product that it's actually solving a real need. There are people who are repeatedly buying, and they are retail users who's coming back month over month using the product, and you can see the whole. If you do a cohort analysis, which is all the people who bought in the month of January, February, March, and then you're in May, and then you see all of them are growing, expanding, adding users. It's amazing. You know that it's going to grow, and then you can talk about raising money. So wait till that point before you think about venture money, and then also decide whether you do want to be a venture money, because there's all the other things which come with venture money, because you can't just take a stroll with your own business. You can grow 10, 20% or 30% year over year, and you'll be fine. But the moment you start taking VC, it's all about are you doubling, tripling your revenue year over year, which means you got to grow fast. You've got to hire more people. There's going to be much more chaos. And do you like that? Do you want that? So there's other aspects to it which you want to think about before you go down that path.
Absolutely. And, I'm a big fan of, because you mentioned at the beginning when you start to answer, having an end in mind, know exactly why I'm actually doing this whole thing. Is it because
Yeah.
I have a dream to become, the next unicorn, and, my company will become one of the big known names in the market? Or is it, as you mentioned, is it just a lifestyle, and then I'm gonna have this income? So 100% on this, Karthik. You mentioned something very crucial, and it's not directly related to funding, but related to building the product. And maybe I should have asked you this before, but it's good that it came with this in this time. So now it's all about building the product, and launching the product. So what do you think, the biggest bottlenecks that, that they will might be challenges, or, put obstacles in front of the founders to really grow from product launch perspective? So what have you seen the most common bottlenecks?
Yeah. So from a product launch perspective, there's a lot of there's a lot of nuance here. The first thing is a lot of the people don't even understand the product launch process and go to market process. It's equally important. It's as important as product development. There is a say, right? You build an amazing product, people will come. People don't. Today, distribution is equally important. Product hunt is where thousands and thousands of products, they think they're going to succeed and rank well, but they actually die. So it's not, there's no easy secret sauce where you just order. There's no easy sauce where you can just follow a plan and you're going to succeed. So you got to really pay a lot of attention and energy to your own go-to-market process, your distribution plan, and how you actually going to get the product in the hands of the users. So initially, let's say you're building a product, and let's say it's an AI product for healthcare, and you test it with a few of your friends in healthcare, and they all really like it. And you're like, okay, great. Now let me put a website out there and send a few emails. I'm done. it's going to succeed. No, it's not. You really got to figure out the whole launch process. Is like, who exactly is you start with your persona. Who is your persona? You really need to clearly define who's my persona, my target ICP, what size of the company, and then what role in that company, who is my champion, what is the sales process looks like. I'm just talking about from a B2B perspective here. Then you need to think about messaging. Like, how do I message the product that there's a light bulb moment? It's like, oh, I need to buy this product. So what is that? What is the messaging? How do you message to the pain points of the users so that they feel like, oh, this is really something I want to try? Then the third thing is positioning. Like, how do you position the product compared to your competitors? I'm sure there's going to be so many competitors, or they're even using spreadsheets or some other tools. So how can you clearly say and clearly articulate why your product is different and what makes it unique compared to all the other competitors out there? You need to think about that. And once you've nailed your persona, messaging, positioning, and then there's pricing, of course, where you need to think about like, is it a seat-based model? Is it like, a product-led, growth, like product-led growth kind of model, or is more like sales-led, where you have a sales team going and selling? What is the business model? So you got to figure that out. And all of this takes a lot of time and energy. And once you talk to all of that, then you need to figure out, okay, what channels I'm going to use to then market the product. Where do my users live? Do I go to, is it an email campaign? Is it conference and events? Is it like Facebook ads? Like what are the channels I got to invest in? And then you got to develop collateral and assets for those channels and then go to a launch. So there's all of these steps involved. And a lot of the times as a founder, it's so easy to like skip a lot of these and just like, hey, I'm just going to do a launch and then the company is going to grow. And then, more likely than not, the launch is going to fail. So my single biggest advice is like, treat the whole go-to-market or the launch process as its own, strategy or like a big item in your, in your company. Equally as important as your road mapping process, where you're listing all the features and figuring out what to build. But once you build, you gotta figure out what's your product launch process, and you got to invest in it and get the distribution, and only then you can succeed, especially in today's crowded market.
Absolutely. And sometimes people come to me and they say, hey, we sometimes they built actually an MVP, or sometimes I see them, they built even almost the product. And they come to me, they say, okay, what should we do? And they say, think about it. If someone tells you today, I have built a website, wow. Yeah, but there are like billions of websites out there. So how someone gonna find about the website? I mean, even take it on something simple and take this to a product, or whether it's like a SaaS, whether it's like a productized service, whatever it can be. And exactly to your point, Karthik, it's a very crowded market. And this is where, you need to have the playbook that you just mentioned to understand exactly, my ICP, is it SLG or is it PLG? Like all these things. And thank you very much for sharing this. I think this is very, very important. Now, as we are almost, coming to an end, Karthik, and really I'm enjoying the conversation here today. But I want to take from you like kind of like final maybe advice for anyone who's are beginning their career in our domain, whether it's from product management or whether like starting a company. If you want to leave us with something to think about today, and also at that, feel free to tell us where we can find more about you and about Ignition.
Yeah. I mean, I would say from my own personal perspective and my experience, there's one attribute which is risk taking, which has defined my whole career, and it's the one which has brought me the most success. So typically, generally humans tend to be risk averse, and obviously with risk is where you get reward. So don't be afraid to take risks. Don't be afraid to follow your dream and start your next company. Don't be afraid to change your job and start some completely new industry, because life is short and risk taking is very important, and that's where you get the best results and also leads to a successful and a fulfilling life. So I want to leave you all with that. And I love if you can all try out Ignition and give me feedback. Ignition, the website is https://haveignition.com. And my name is Karthik Suresh. You can find me on Twitter. It's just Karthik Suresh. And then on LinkedIn is Karthik Suresh LBS. Yeah, connect with me. Let me know if you have any questions. But yeah, thank you.
Thank you very much, Karthik, for all these, valuable insights you shared with us today. For the audience, don't worry about the links. They are available in the show notes, so you can find them there and connect directly with Karthik. And please go and try Ignition also as well. Thank you again, Karthik, for being with me here today. I really enjoyed it, and this is how I usually end my podcast episodes. So this is for the audience. If you just discovered this podcast by luck, thank you for passing by. I hope you enjoyed it. If you did so, please subscribe and share it with your friends and colleagues. We are available on all podcasting platforms, and we are available on YouTube also as well. And if you are one of the loyal people who comes always back to us, thank you very much for your support and for your feedback, comments that you send privately to me. Thank you very much for this. And thank you for tuning in. We'll meet again very soon. Thank you. Bye-bye.
Hit that subscribe button. Share the show with your tech-savvy friends and fellow entrepreneurs. And leave us a review on your favorite podcast app. Your support means the world to us.